That is sad, man. It's like uh, it's like you're watching like a movie montage of like a guy who's going back to his childhood home, and all his friends have moved away. And they tore down all the houses and they built a mall. No. Oh, but then he checked his bank account and he was like, "Oh no, I thought I'd already paid the rent, man. Shoot. The world is never going to be the same." Hey, happy Wednesday out there, everybody. Let's get that music over with, man. That was putting me to sleep. Welcome to the closing beat. Hope you're having a good day, right? That's all I can really say. Have a good day. Hey, anyways, we're financial advisors. We're here to talk about the stock market. And it's going to be a lot of talk about downward movement here today. I don't know if you saw what the markets did today, but it was rather rough. So it's yet another day where we're trading outside of a 2% range. This is historic here. The fact that the market on a daily basis is trading outside of 2% ranges, meaning the difference between the highs and the lows, 2%. Really incredible. Now, if you're working with a financial advisor or whatever you're doing, if you're not getting that help, I mean, this is what we live for. This is our moment here. How do we take advantage of this? If you're losing more than the market, you're losing, as much as the market, somebody should have been looking after that. I did a whole thing with clients. We do a bi-weekly communication. I do a Thursday night class that's live for everybody, and then I do a weekly email because not everybody can come to the class. Y'all got lives, I get it. But I like to keep in touch constantly. I'm constantly reaching out, seeing what's going on. Has your life changed? There is no reason that you will ever find us not wondering, what can we do? How can we help? How do we add value here? Or providing those ideas and suggestions. But boy, it's sure nice to have some cash on the sidelines. We've had cash on the sidelines since the end of last year. And wow, I mean, it's been kind of fun. Now, we're definitely pulling back. If you're one of our clients, you can go look in the notes from Jazz and see all the portfolios. You could look at your account, of course. But it is nice to not be falling as much and having to be worried about this nonsense here. Remember now, in bear markets, which is what we're basically about to call this sucker, the bounces that you have are extreme, right? And we've been talking about that since this guy back over here. You tend to see that where it makes you feel like, darn it, I missed the bottom. I got to get going. Well, we've seen that over the last couple of days too. The fact that we're erasing that all in one day lets you know there is no reason, like I've been saying for weeks now, there's no reason to dive into the stock market. All right, go ahead and scale in. Did a class a couple weeks ago, how mutual fund managers and how big fund managers, they use zones of the market to decide where they're going to get in. They do not just pick a day and say, well, today's the day, I must be getting in there. So all that to say, it's a little bit of a marketing pitch there, but we are always trying to reach out. You'll never find us. I talked to an advisor today, and I would just call and ask questions, just kind of catch up. I thought he was one of the good ones, and he's in the Bahamas. I'm like, what are you doing? And he's like, well, there's not really much that could be done anyways. I'm like, what? Like, I couldn't believe it. We're not those type of people. We don't have hobbies or Bahamas in our future there, or vacations or time off or anything like that. This is what we do. If you want to join us, of course, jazzwealth.com. And I appreciate all the help and support there that you guys have given us, because we are a small fish in a big pond. And so, it takes a little extra work to find good people that want to work with us. Anyways, like I've been saying here and there, those numbers on the right-hand side of your screen are accurate. That's not wrong. That is what we saw today. The NASDAQ darn near hitting a 5% down day. Let's start with the S&P here. So in the S&P, we've got what's known as a retail crash out there. Retail was the big news of the day. Walmart is actually looking pretty smart here after hearing about what Target's got going on there. Target was the big focus today because, well, that's the biggest drop for them since I was 5 years old, since the crash of 1987. I guess I was just turning 5 years old, actually. Profit margins for Target down 4%. That's a lot. That sounds like a little bit, but that's a lot. They guided for, so they were giving guidance of previously of our profit margins to be around 8% or higher. Those were their words, not mine. They now changed their wording to profit margins should be somewhere around 6%. Their exact words, somewhere around 6%. We don't know. The CEO had a lot to say about the current environment and how people are still buying. They're just changing their buying habits a little bit. Sales were down for them overall, though. And he says that he doesn't see the current economic conditions, inflation is what he's talking about, he doesn't see them improving right away. This stock today has its worst day since the 1987 crash. Here's a look at that. If we look at every single day, the performance of it, today I didn't plot for you because that would just scare you half to death. You got to go all the way back here to the 1987 crash to find a worse time for Target. Now, I say this because Walmart's actually looking pretty smart here. Even though Walmart was no, sort of stranger to the downside here today, it's good news for Walmart. See, what Walmart's doing is when you look at their earnings yesterday, they were basically saying, look, we kept prices the same. We tried not to raise prices, and so that took a hit. Our margins took a hit because of that. They're going to fight that as long as possible. What happens? Eventually, Target's going to have to raise prices. Others are going to have to raise prices, and Walmart's going to be down here. As a consumer, you're going to be going, I guess I'll go to Walmart, right? You're going to notice the cheaper prices, whereas Target's going to have to raise their prices sooner, and now we could tell by their earnings that they can't weather this much longer before they're going to have to start passing on more and more of their costs there. So really, really bad. As for Walmart, that's kind of good news that yesterday we talked about how you would want to be 6% or further out of the money if you're going to start a new position. We showed the data on all that, and well, it didn't work out perfectly, but it has worked out where today basically it fell 6.79%. So the day after, it did the exact same thing that it normally does. How about that for data, actually? If you watched the closing beat yesterday, I mean, it's like the same thing, right? Just a couple fraction of a percent more there. Very, very interesting. Nonetheless, looking around, the S&P lost 4% on the day. That's not normal. If you're new to investing, and if you come from the crypto market, maybe you're like, okay, that's normal. That's not normal for the stock market. Take a look over here. Normal would be this. Pullbacks that are small, meaningful, right? Calm, sort of collected pullbacks here. What we've seen since the beginning of the year, look at the size, the range of each day, the size of the candlesticks. I mean, that's a simple way to do it. Just look at the size of these suckers here, much larger than what we're used to. The good news is it typically gets slower over the summer. I don't know if the summer is going to be any different, but we tend to see a lot of action leading up to the sell in May and go away phenomenon that everybody talks about. And then the summertime tends to get a little bit quiet because, well, we're all going on vacations, right? All of you are going on vacations. And that is still what's happening out there, actually. There's a lot of people that are actually going on vacation, bought their vacations, ready to go, right? Already booked their plane tickets, got their passports and all that good stuff. I hope you have a good time. All right. The Fed is now hinting at raising their interest rates above, or their target interest rate goals of above neutral. Remember, neutral for them was like 2.34 was at the moment there. They said now we maybe need to be somewhere between 2 and 3% there. That sent bond prices higher on the day. Let's take a look over here, which is good news, actually. If you look at bond prices, they have been oversold. They have also been highly correlated to the stock market, which is not normal for stocks and bonds to fall. So no matter if you're a nice, perfectly diversified individual in your 401k or IRA and you have stocks and bonds, they were both decimated so far this year. And that's, that's what it is. But fun fact, look up what the word decimated means. You ever look that up? It's kind of gross. Anyways, bond prices were actually moving higher. It's a good thing because you got rates moving lower. Why do I say that's a good thing? Well, I say it's a good thing because here's the 30-year mortgage rate, right? National average. We are now above 5.27%, and if you look at that, that's going to put you back here at 2009 levels. What that means is if you are 30 or under and you are a first-time home buyer, you've actually never seen rates this high, so it may not be shocking to you because you don't know the difference, right? You know of what we had lower rates, but you're like, I don't know, what is it? If you're over the age of 30, you're a bit frustrated right now because, well, that's expensive, but aren't home prices still expensive? Mortgage purchase application data has come out showing an 11.9% decrease in the number of new applications since last week. That's not like over the course of a year or that's the change relative year to year. No, that's week to week. So just in 1 week, 12% less people going out there getting a mortgage. That's a huge number when you compare it to normal week over week progress there. So then the same could be said about mortgage applications, the bond market, the stock market, meaning they're all having these wide range moves. This is like a reset in a way, and I hate to use that word because then people are going to think I mean the Great Reset. Is that what it is? Hunker down and get your rice and stuff. No. Price is hinting for its next zone. That's all it's doing. It's fishing. I should say fishing. So price is poking higher, poking lower. No, that's not going to work. Over here, maybe a big sell-off, a big rally. No, we're not quite there yet. Price is trying to find the next zone over the long term of where it's going to spend its time or where it's going to try to rebuild from. This is very normal. We did this through COVID, only it happened in 33 days. This has been longer than 33 days. Price does this. It tends to fish for spots where it likes to settle. We just have yet to get there yet. The good news is, if you look at a chart like this, a weekly time period, you can find that we are getting close to about the halfway pullback, right? We got a little bit to go still, but about the halfway pullback from this last rally. Technical traders like to look at that. You know, they like to look at that as it's known as a Fibonacci area. You could look at it as a glass half empty, half full area. There's all kinds of words for it. But we're working our way back towards that. The sad part is that would officially put the S&P into a bear market there. So basically, all of that to say, tomorrow could be up 4%. You know what I mean? There's no guessing the day-to-day market here. It just kind of feels like the market's trying to ping that 20% number. And, you know, just get it over with if that's what the case is going to be. That's fine. But for the moment, I personally hope we do not rally back sharply. We are used to sharp rallies, sharp recoveries. For the last couple years, any pullback has very quickly recovered itself. I kind of hope that doesn't happen this time. I'd like to see the market sit here, go quiet through the summer, maybe smaller ranges, to allow the long-term investors time to dollar cost average, man. Bring your average cost down. Let's go. Let's do it. If we turn around and just rapidly rally back, number one, I think it would be questionable, right? Why did that happen? I've been saying that for weeks now. Like, why should the market go higher in any meaningful way? But number two, it doesn't let you bring your average cost down. So that kind of sucks there. And hopefully that continues to stay down here and then go sideways. That would be ideal. Anyways, there's a lot of other, I mean, you could look around and see like inside the S&P here today, you're not going to find much that didn't participate on the downside. So here's Apple. I always show some of the bigger stocks first because these are the guys that move the markets. I saw a headline earlier that said retail leads the market lower. Well, retail stocks didn't lead the market lower. They leaded the sentiment of that people believe the market was going to head lower. That's what happened because they're not big enough. They can't actually do that. So Amazon lower on the day. These are the big stocks that can move the market, and they all had multiple percent decline days. No bueno, man. That's not very exciting there. Over to financials, all of them pulling back, some less than others, but 98.5% of the S&P was lower. TJ Maxx was one that was a little bit higher on the day, quite a bit higher on the day. That was earnings related. I think Progressive finished up 0.5%. You know, EA Sports maybe. There's like 8 names. Yeah, that's one of them. So there's 3 of the 8 stocks in the S&P that were positive on the day, and I mean it. There's like nothing else. Assurant, yeah. Like, what are the odds that you were buying Assurant today? Probably not very good. So you likely did not participate in any stocks that were higher on the day. No problem. There's always tomorrow. New highs and lows today. There were only 5 new highs. It was energy and BMY again, which actually finished lower, and so did energy stocks as well. But BMY did hit new highs, and then every other stock was energy related. New lows on the day, 31 of them. It wasn't hard to find a new low. There were obviously quite a few of them, and some of them were nasty, which is maybe attractive because something like MGM hits a new low. It's really starting to extend itself. MGM doesn't like to be extended, so it's very difficult to find that this where the bottom may be. But it's trying to get extended for you. Walmart's another one there. That's a rough couple days for Walmart, down another 7% on the day. You got Walgreens. This is a tough one. Look at Walgreens here. This thing was trying to break this downtrend. You could draw a line if you want and see the downtrend. All of a sudden, just erased in one day, man. There is no chance that breaks the downtrend this week, probably next week or the week after. So a rough reversal there for them. And not even the digital REITs were immune to the rally here today. DLR to the sell-off today. DLR hit new lows as well, and in the REIT space, they have been pulling back. That's fine, but the digital REITs had at least shown some signs of life. That was all erased today. So that's it for new highs and lows. Stocks in the news. You got analog devices. There you go. This was an earnings play today. They actually started the day higher and then probably just fell because of the stock market. Earnings were good. They raised their guidance. They had a lot of good things to say overall in their earnings report. But like I said, it started higher and then everybody was just selling. It was broad selling throughout the day. To give you an example, it didn't matter where you were. Large cap value stocks down 3%. Large cap index down 4%. Of course, you know that. Growth stocks down 5%. Small cap growth down 4%. Small cap value down 3%. It didn't matter. You're either down 3 or 4% if you're in any one of those factors of the market. Gross, right? So every sector was lower on the day. Consumer discretionary down 6.5% and utilities down 1%. So you could just quickly have a little stat that says every sector lost at least 1% on the day. All right, you got Lowe's. So they hit new lows down 5.25%. They didn't keep up with Home Depot. They did have sales that were lower, but they were also, like Home Depot, able to pass on the higher ticket charges. In other words, they were able to pass on inflation. So you went to Lowe's a little bit less, but you paid a little bit more, and Lowe's didn't have to suck up that difference of what you had to pay. They passed it on to you, and you gladly paid it. Gross margins at 34%. So other than that, sales were the focus because Home Depot had higher sales. So, it's what it is. That's out of the way now. TJ Maxx. Better than expected earnings. They did lower guidance going forward. That would maybe be the only little weak spot for them, but this is consumers shifting down the supply chain or the retail supply chain. Maybe Target and some of the higher end retailers aren't going to be a good fit for you. You end up going to TJ Maxx thinking you're getting a better deal, and you're, as a consumer, making that switch. Twitter, the board says, we're gonna force Elon Musk to make good on his deal. He's got to buy these shares at $54.20. That's what he agreed to. That's what he's got to do. More drama to be coming up there. And lastly, speaking of Elon Musk, Tesla kicked out of the ESG index, and officially nobody really cares. Look, we have 7,000 clients all over the United States. Not one person has ever asked me the ESG score of our funds. They've never asked to be in that category, participate in any of that. So I have to use that data to assume that people just don't care, like we're being fed, ESG, you got to go ESG, you got to go ESG. That's okay if you want to do that. I just have no data points to say that's a popular thing to do, right? Not only that, it's kind of frustrating that the S&P ESG can actually say, we don't like the way you handled a investigation by the National Transportation Board, and so therefore you're going to ding you a few points for that ESG score there. What? Right? So Tesla is not environmentally safe. That's just, or environmentally friendly, right? Or they could do better there. What? I'm not sure I get. But Disney is, right? Oh, they put some solar panels out there, and I love Disney, the parks, by the way. So I'm not bashing on them, but Disney falls in there, but Tesla doesn't. Right? I'm not sure I understand that. Amazon falls in there with all their planes and trucks delivering, but Delta doesn't? I mean, it's just weird how they come up with this stuff. So I don't follow it. I'm not against it or for it. I just don't know much about it to say that it's something we should be focused on, because it feels like one of those things they just keep pushing you, and it doesn't seem like many people truly care. Not that we want to do bad. I'm not saying we all want to be out there working with companies that are just horrible people. Of course, the world, would discover them in a heartbeat, but it's just a weird thing. So I don't know what to say much of. If you have any questions on that, I'm afraid I'm not going to be the guy to give you the best answer. But if you do have questions on anything else, I'm happy to help you. I do think that we likely see the market try to grab the 20%, and whether that happens, tomorrow or whatever, whenever it happens, I don't know. But it sure seems like that's what's trying to happen. Every rally gets incredibly reversed. Not just a little selling, a lot. Yeah. ESG is another. Well, I'll tell you, there's a lot of money being made in ESG right now, especially in our industry. I don't know. It seems a little bit shady to pitch that, but maybe one day, that's just what we have to do. But I don't know why. that's the case. You got gold bottoming. You like gold for a bottom there? Gold is down just a fraction today. It is super extended. So gold-related products, silver-related stocks, ETFs and things, super extended to the downside, and they find themselves back in what technical traders would consider a really thick area of support. No bounce yet, but I don't blame you for saying, okay, I'm going to find my spot here and give that a shot. Yep. What do you think? What do you think China? What do you think about China? I think Shanghai had a chance at breaking its downtrend there. That was unfortunate. That got erased, but it sure seems like it was trying to find a way to break out of that downtrend. That's what I really follow there. And nope, not today. But I hear good news over there with the China cases and how they're handling it. It seems like maybe we can come out of that a little bit. I read a little bit about that. Quincy, Dustin, what are you doing in your clients' portfolios to keep them safe? Nothing now. We are actually trying to add into the market, just haven't found a really good time to get excited about it. We were selling in November, December last year at the end of the year. We were actually selling 1% a time. Hey, every time we make a new high, I'm going to sell 1%. It's all recorded. I made videos and classes of it to bring everybody up to speed that the time to slow down your portfolio, if you're even going to do it, is on the way up. Now that the markets have fallen, you don't now go in there and say, well, fix it. You know what I mean? No, now you should be going, make the most of it. I've always thought that way and always worked kind of backwards. So now we're actually coming and saying, we have cash. We have not fallen as much as the market. I don't have phone calls of people saying, what are you doing, man? This is crazy. We're falling like crazy, because it's not happening. And so now we're actually trying to just step in and find the right moments to go, all right, this is our zone. Let's go ahead and add some of that cash back. Not with any intent of trying to time the market or, assume that we can pick the bottom, but saying, hey, we just avoided all of that. That's awesome. Let's take that cash and put it to work, Don't slow. So if you're out there and you're like, I'm never going to talk to Dustin, Eric, any of us here anyways, just do me a favor. Don't slow your portfolio down now, because what happens? You're going all rapidly falling on the way down. All right, that sucks. But if you slow down now and the market goes and starts recovering back, even if it takes a year, you're moving slower than that. That's a recipe for falling behind really quickly. You kick yourself in the butt for that. So try not to do that there. Can the average person do the buy, borrow, die strategy? What is the minimum required for that to work? If you're talking about your brokerage accounts, it's becoming more popular. We do it here, or we offer it to clients here. Can it be done? Yeah. I don't know why you're like what that means to you, but is it something that can be done? I mean, this happens all the time. I used to work with the rather wealthy people, and I mean, some of them are kind of heartless when it comes to that. But yeah, is it possible? Yeah. There you go. Justin's got it, man. It's picking and choosing spots to add to some of those positions. Getting beaten up a little bit, you will, right? You may have another 4% in this market to really try to scare you out, but you pick in your moments. You go, this is my range. I'll play for down to the 20%, give or take, for the year on the S&P. I'll play for that, use up some of my bullets down here. Maybe you hold out. You let the market give you a convincing rally or a higher low. We haven't seen a higher low yet. And you go, okay, I'll use some of my bullets on the way up too. I feel better about this. The ranges are tightening. You could use all sorts of metrics to say, now's the time to start speeding up. But by all means, don't slow down. Yep. So, you guys are talking to each other. I like that, man. We got a little community here. People know each other. It's the same names and stuff. Rice and beans on the downside definition, reduce the speed. Yeah, absolutely. Of course. Yeah, otherwise we wouldn't be able to, I wouldn't be able to have said everything I just said. But rice and beans invest in well, I have heard of a client that did say, man, I'm toughing it out, man. I'm going without so I can buy. And I'm like, all right. Well, younger guy. He can do that. Eat the ramen and stuff like that. Oh, yeah. So we talked about Walmart and Target, the earnings, of course, on that. I just find it interesting that Walmart on the surface looks like, holy cow, they're taking a hit. Margins are taking a hit. Costs, they're not immune to cost pressures either. They're playing a game with you. They did this in 2008 as well. This is their game. is to say, yeah, we're going to leave our prices lower. It's going to hurt us. Stock's going to fall, but we're going to soak up more customers over the long run. Yep. J-Dub, where should you consider nibbling next? Meaning which area would you consider next? So what I would probably do is say, all right, I can see today that everything's sold off at the same pace. There's nothing today that stands out as I got to go be over here. Value, growth, normal index investing, all of it just sold off. What you're looking for is someone or some area to get very extended. And everything's extended right now, but you're looking for something to stand out. So we can try to talk about that as it happens, but there's nothing that I have to share with you today. No. All right, I'll let you guys get back to your ramen noodles and your bugs outside and all that stuff. Little fish caught from the pond in the backyard. Like I said, I have no idea what happens tomorrow. We'll be here. We'll do the show again, of course, but could tomorrow just be up 2%? I mean, yeah, there's nothing to say that would not be possible. Probably not likely, but is it possible? Yeah. It could be. We'll see what happens. I like to watch the day-to-day. Again, we're long-term financial advisors here. And I think that probably makes itself clear because we've had the cash since November and December. Obviously, we're sitting there, right? It's May now. So we're not short-term doing this trading sort of thing. So it's a whole different animal. I just like talking about the stock markets daily because, well, number one, it shows I'm here. Honestly, it's a little bit of marketing, right? You know, we're here. Keeps the face and name recognition, but also it's just staying in tune with everything. That's always fun. You like what you do, you know? All right, enjoy the rest of your day. We'll get out of here, and thanks for hanging out. See ya.